All right, guys. In this episode, we're going to talk about basically the truth nobody tells you about first time buyers. If you're trying to buy your first home and you're getting feedback from family, friends, uh, realtors, your loan officer, someone's always going to give you advice, but it may not necessarily be the advice that you want, um, or even the advice that you ask for. So I wanted to create this to kind of give it a bit of just clarification, clear things up, and hopefully it'll help you achieve your goals, which, assuming it's the American dream to try to buy your first house. Um, and we're going to go over maybe some FHA programs, down payment assistance programs, anything that could actually help you get into your home. Um, and, let's get with it. So, right now, you hear rumors about mortgage rates. They're super high. Um, home prices, they keep rising. I mean, you look in your neighborhood. Nobody really needs to tell you this. You can just see homes that 20 years ago you can uh, probably buy for maybe 50% of what they're actually priced today. So you're forced to sort of wait for prices to drop, or prices to crash if there's some huge event. And they also tell you, hey, save a ton of money. 20% down. That's the way to do it. You avoid private mortgage insurance and all that fun stuff. But um, why actually wait for all these things? Because if you wait for all this stuff, it's going to maybe get worse. So there's no way of knowing, honestly. But basically, I just wanted to react to this and give you my strong opinions on this. If you don't get to that point where you actually um, invest your time and efforts, like educating yourself, going online, uh, watching videos like this, um, you'll never know. You'll just listen to all the myths. First time buyers generally believe, like, hey, I don't have enough money. Um, Prices are too expensive. I'm just gonna wait and see if rates or prices are gonna go down. Um, and you never take that initial step. But the truth is, um, you actually have more options than you really know. So, for example, you don't need 20% down. FHA programs. So FHA is Federal Housing Administration. That's a federal housing insured loan. So it removes some of the risk. The way they remove some risk is by adding in to the payment mortgage insurance, PMI, private mortgage insurance, which reduces some of that risk. Um, so you don't need 20% down. But you'll have to pay that PMI every single month, or at least until you get to a point where you've built enough equity just by making your payments naturally as you would every single month. That's important. Make your payments on time. Um, but by also, by default, building equity in the home, and that's just through the nature of the beast in a way. Home prices tend to go up year over year. I'm sure if you research it, you'll see that prices have gone up. I've seen it since I bought my first home in 2,000. Um, I've noticed it. So the other myth is my credit isn't good enough. Uh, it's not just credit that makes a difference. Obviously, your down payment, your job stability is very important. So there's a few different factors. But if you feel that your credit isn't good enough, you can get a free credit report online. I'll include it in the description on the video. Uh, but that's a free video that you can get online, or you can go through these other Credit Karma or something like that, where you can kind of gauge, see more or less where your credit score is. Um, and if you speak to a lender without any obligation, just say, "Hey, I think my credit is here. What do I actually need?" FHA actually goes down to 580 uh, mid FICO, they call it. So that's the middle score of all three credit bureaus. So there are three credit bureaus. There's Experian, Equifax, and TransUnion. Um, so they don't take an average; they take the actual middle score, and based on that is what calculates or partially calculates your eligibility to buy a home. So most people will have, a credit score in that range. And if you don't, there's ways of improving your credit score, and that your lender loan officer can give you the right advice. But my suggestion is, you can listen to everybody's opinions, but unless you speak to a licensed loan officer, someone that deals with this, obviously somebody with experience like myself, um, then everything else is just going to be everybody else's opinion or suggestion, and some things don't necessarily always work. So I've heard them all. Hey, what if I do this? What if I do that? And usually most of the time it's just like an exploratory type of situation. Like, hey, what if? What if? What if? Let's just keep it simple. You need 3% down payment, 3.5% rather. Some conventional loans allow 3%, but then there's another caveat to that where you need to make under a certain median income within your county. But that could be a possibility also. Um, but keep it simple. So 3.5% down payment. Make sure it's in a checking, savings, any kind of bank account that you can actually source. They're going to want to see proof. Like, where's this money? Is it in cash under the mattress? That doesn't work. It's got to be in a bank. Um, Credit isn't good enough. Like I said, go online. You get your free credit report online, just to get sort of a gauge where you're at. Speak with a loan officer, a licensed loan officer. Just make sure it's no obligation. Just so you can see if you're uh, ready to follow the next step, or what do you need to get there. And then all these other myths about rates being too high, home prices being too high. I mean, it's all relative to what you actually want to buy. If you're going to attempt to buy a home that's above and beyond your means, then you probably need to wait. But if you want a good quality starter home or something you can work within your means, within your budget, within a certain payment range, taxes, insurance, all those things are answered for you before you actually get that pre-approval letter and go meet with your realtor and start looking. Um, Actually, on that, a lot of people go to a realtor or open house. They get excited on a specific home. Obviously, realtors, they're also in the business to sell you a home. So don't put the carriage before the horse. Don't start looking at homes and getting goo goo gaga over a certain house, neighborhood, price that you probably can't afford. Just get your ducks in a row. Find out what you actually can afford. And if it's not within that idea that you had. I mean, certainly you can go to open houses, do whatever you want, but get the answers before you go to the next step. Is what I'm trying to say. Um, oftentimes somebody will look at a house, fall in love with it, and then realize that they qualify for 50%, 70% of that amount, and it's discouraging. Um, then what probably started out as a good idea to just move forward with the idea of trying to buy a house, build that American dream, and then you did it to yourself. I mean, so follow uh, the line, I guess, of getting from point A to point Z, or Z being the end, owning a home, having the keys to your home, right? Um, so, what if you don't have the 3.5%? And beyond that, you'll have to pay your closing costs, your application fees, your appraisal, your title costs, recording charges, attorney, depending on your state, if an attorney is usually something that you get, um, any points, optional points. Um, so all those things have a cost, and it varies depending on where you live, depending on property taxes. Um, so if you don't think you have that money, here's a solution. So there are programs out there like grants, forgivable loans, um, in your state. And oftentimes, the forgivable part is if you're in the home for a certain amount of years, guess what? You don't have to pay it back. And that in itself is equity that was built. Um, so, grants are an easy way to cover not just the down payment, but also closing costs. And you can couple that, you can join that with a seller concession. So a seller concession is, your realtor can help you with this depending on your market. With FHA, you're allowed up to 6% of the value of the home. So if the home is, just for easy math, is $100,000, 6% is $6,000. Obviously, if you're at 200,000, now you're at 12,000, 300,000, 18,000. That's a lot of money to cover. Now that money, the seller concession, is only used to cover your closing costs and or prepaids. The down payment either comes from you or, like I said, from a state grant or a lender inspired grant. And those are ideas, if you're in the right home within your budget, within your debt ratios, where you can actually buy a home that's um, affordable and also um, within your budget, well within your budget, because if you're not using any of your money. So now on the backside of that, so let's say you get seller concessions, you get a grant, you get all that, and you get pre-approved and you're ready to buy a house. There's also that backup plan, right? And there's something in the mortgage industry called a payment shock. So exactly what it sounds like. Like if you're, and I'm just going to use simple numbers. If you're, let's say, paying $1,000 rent, and now your mortgage payment is 2,000. If you don't know what that payment is from the inception, from the very beginning, that's a shock. Like you go to the closing table or near the closing experience, and hey, my payment is double. I can't afford that. Because when you get pre-approved, it's based on your credit report, your income, and what actually populates to your credit report. Um, so a loan officer or a bank will not see other things that are not on your credit report: your car insurance, your health insurance, your life insurance. If you have pets, you pay for pet food. If you like dining out, that's an expense. Gas, groceries, and other things. These things are part of your budget, but not necessarily on your credit report. What is on your credit report? Loans, installment loans, mortgages, car payments, things like that. Revolving accounts, credit cards, um, department store credit cards, student loans. So those things are on your credit report, and that's what's used to determine the debt ratio or qualification of your debt ratio. Um, so as a backup, focus on I may be using a grant and a seller concession, coupling those together. I'm able to buy a house without any money, but try to, let's say your mortgage payment is $2,000, try to have at least a couple of months worth of backup payments. So 6 months, uh, 3 months, let's say, it would be $6,000. And that could be, we call that reserves. Reserves or backup. Doesn't necessarily have to be in your checking or savings or an immediate account that you have immediate access to. It can actually be um, a retirement account or something like that, where it's there. If you need it, you have it as a backup. For example, if something extraordinary happens, COVID is the ultimate extraordinary, right? People lost their jobs when they were home and things like that. Government steps in and does forbearances and, kind of it's a band aid till you get back on track. But what if it's something less extraordinary? You get sick or something else, where you have to divert your funds that normally go to your mortgage payment somewhere else. And that's important going forward. Can I afford this? Um, Blank sheet of paper. What are all your expenses? Not just your big expenses, car payment, cell phone, insurance, things like that. Pet food, dining out, like all those things I mentioned. You buy clothes, you feed yourself, right? So all those things are super important. Um, so this way, when you have all your ducks in a row, you have your bank statements and your pay stubs to show proof of income, your W-2s and or tax returns, or when you have all that, also have your budget with you. So when you speak to a bank or a loan officer, um, you can actually make uh, a good decision. So if the loan officer says, "Hey, congratulations, you're approved for $1 million," doesn't necessarily mean you should buy that home for $1 million, because then when you budget yourself and you look at what you actually spent or are spending on a monthly basis, um, you'll know if that makes sense to move forward or not. So basically, a lot of people wait till for an extraordinary event. Either I'm expecting a raise next month, or um, I think prices are going to go down, or I think rates are going to go down. Um, sure, do whatever fits you. Um, if that's the game plan, that's the game plan. I'm just trying to give you an alternative to, hey, what if you could do all these things, be an affordable home, and maybe doesn't have to be your forever home. That could be that stepping stone of a home, if that makes sense. Where if you intended on buying a home that, let's say, is 600,000, I'm just throwing numbers out there, but you actually approved, reasonably approved, factoring in your budget and everything else for 300, 350, and okay, you get into the house, maybe you need some tender loving care, and you fix it, and you paint it, and you do a couple of things. You stay in it for a few years. Now you built this equity. Um, Maybe you started out at 300, 350. Now it could be worth 450, 500 or more, depending on where you live. So that could be a stepping stone. Use the equity built in that. Obviously, always, always, always make your payments on time. And on that note, to kind of they're off to the side. Once you get your mortgage and you're in your house, if you're ever seeing yourself potentially falling behind, obviously don't fall behind and then react to it. Be proactive. Call your lender and say, hey, I'm having some difficulty. So communication is key because maybe they can work something out with you where you don't actually have a late payment reported on your loan. That's important. So um, so the next thing is you basically want to know what you qualify for. You meet with the loan officer. You take all those steps. Obviously, I can share so much more with you. Um, just you know, send me a message. Comments down below, obviously, and I can always cater or try to answer your specific situation. Right. Um, so you get that free consultation with a loan officer or bank. You do a mortgage review, your wants, your needs, review documentation, review your debt ratios, review your potential payments. What are going to be my estimates? Um, you get pre-approved. You actually get a letter that says you're pre-approved based on the information you provided. Your credit was verified, your assets were verified, your income was verified. That's what a pre-approval letter is. A pre-qualification is just hypothetical, again, based on information you provide, but maybe you don't provide everything. You just have a conversation. You chit chat with your loan officer or bank, and you get just a pre qualification. But a pre approval is an actual letter that is what you take proudly with a big smile on your face to your realtor, um, and making the right choice on realtor. We can have a whole conversation on that, because you don't want to go through this process feeling confident and moving forward, and then you start working with a realtor that's sort of subpar or maybe brand new, and everybody deserves a chance, but experience can work in your favor. And traditionally, you want to get a buyer's agent to help you that meets your specific needs and wants, and not the specific needs and wants of the seller, whoever's selling the home. In some states, they're allowed to be dual agents, where they represent the seller and they represent you, the buyer. So again, that I think that could be a whole episode on the process of actually buying. So I think we'll do that probably next. And then you get access to buyer guides, um, the do's and don'ts. That's super important. So during the process, um, hey, my Aunt Tilly, my Uncle Joseph, whoever it is, they want to give you $10,000 gift, and they got some money in a tin box, and here you go. Um, Before you do any of that, speak to your loan officer. Even if it makes sense to you, or you think it makes sense to you, it doesn't necessarily work within the sourcing aspect of trying to get a mortgage, and that's important. So speak with your licensed loan officer, um, and say, "Hey, are gifts allowed?" Absolutely, they're allowed, and many people do it. It could be "Hey, I graduated college reward" type of gift. So it could be something like that, or you just got married. Maybe your family gave you or wants to give you a gift to buy a home. That's awesome. Um, You get that, you take it and run. But I'm going to put some links on the bottom, in the information on this episode, and you know, hopefully it'll help you make that decision. And if not now, time can possibly be on your side. Just trying to give you ideas of how you can buy something now and not wait. Sometimes you don't believe the hype. Just go with what works. And you don't know what works if you don't look into it. And I'm just kind of giving you some avenues that you can take to try to buy your first home. And if I knew then what I know now, as I tell my kids in their 20s, buy something now. Um, because by the time you're pre-retirement age, if you have a home that you've invested your time, love, and effort into, and it's paid off, uh, that's the American dream. It's not buying the house. Buying a house, yeah, great. It comes a lot of um, good feelings, good emotions, but it's once it's paid off, or once you get to that stepping stone, get to that next house, maybe, like the explanation I mentioned before, starting out at a house that's maybe a little less than what you expected, and then getting to that bigger house and then paying that off. So that's all important. So I want to thank everyone for your time. For those of you who made it till the end, thank you, because that's going to help my channel. I have a lot to talk about. I could keep going, but there's something blinking on my screen, and I think I'm probably out of time. But if you like this video, thumbs up, subscribe. That helps. If you want to share, maybe you're not the person that's in the moment to buy a home, and you want to share this with someone you know, or potentially maybe a good idea for them. Do that for me. That'll help. Everything helps. And we're going to see you on the next episode. And thank you, and God bless.
Question everything.